discuss Metro Brands' earnings performance, and we've got with us Nissan Joseph, the CEO, joining in on the show right now. Mr. Joseph, hi, morning. Great to have you on the show. Just going by your, quarter gone by performance, your profits have dipped despite the uptick in top line, and e-com growth as well has lagged a little bit. Tell me what the demand scenario is like right now with all the disruptions now behind us in Q1, hopefully. Is it improving now? And do you expect the rest of FY27 to make up for the slower demand in Q1?
Well, I wish I could always say that disruptions are behind us. It never is. This is retail. There's always going to be that, but you just got to be prepared for it. When you look at our quarter, I think it was a good quarter from the standpoint that April and May was soft in a couple of ways. There was a shift of festivities that pushed out to June. June came back strong, despite the fact that we didn't have monsoon. And as you know, monsoons are a big driver for our Crocs stores and our Crocs sales across the banners that we carry it in. So when you look at that, I'm quite pleased with the 14+% gain that we had. To your point on the profitability, before I get to that profitability, you look at our gross margins last quarter, they were the highest that we've had in the last 5 quarters, coming in at 59.7% roughly. So those gross margins are holding up, and our average sales per square foot also held up at 43.50 per square foot compared to the same quarter last year. The drivers to us, having some expenses this quarter, one of them was we continue to increase our investment in marketing because we think that has a payoff over a longer period of time, but always you get that blip in the short term. There was a treasury income gap that we had this year compared to last year. And as you know, we carry a substantial amount of treasury. We've also started investing in a lot of talent at the leadership level because we know we need that kind of talent to drive growth that we aspire to. And last but not least, we opened 140 stores last year. It was a net of about 124, but new stores never come into the same profitability for the first couple of years as your existing mature base. When you look at all those factors in there, I'm actually quite pleased with the profit performance of the company.
So, given that your same-store sales, at least in Q1, have moderated, right? What is your outlook on the same-store sales growth for the second half of the fiscal, especially with the festive season ahead of us?
Yeah, there's a couple of things. One is we still have Q2 to get through before we get to the second half of the year, right? When we look at Q2, we see a little dampening in Q2 towards the tail end because some of the festivals have shifted later by a couple of weeks that put the selling season into Q3, this fiscal Q3 of this year. But I think it's all going to even out. Overall, we're seeing good demand across our banners. And, we operate multiple banners in multiple price segments. So we are able to see true demand in the country. We also operate across a lot of different tiers, all the way from metro cities down to tier 3 cities. We see good demand picking up. So we feel confident that we always guide to 15%, and we feel confident that we'll hit that number comfortably this year.
Joseph, hi, morning, Sajid here. You have guided for a medium-term EBITDA margin guidance of 30-odd%. Do you think that's achievable? And what are the tailwinds that will lead to that target?
Well, first of all, we've achieved 30% quite a few quarters, Ajit, including last quarter. We were at 30% EBITDA. There's an Ind AS factor that comes in there that moves that number a little bit. So what we need to do is continue to operate with the financial discipline and the operational rigor that we have. I'm confident that that's a number that we'll continue to hit within the range, plus minus 1 or 2 bips. So we are there.
And you spoke about the fact that this disruption which is coming in from geopolitical risk. Can you quantify that? In what form it's impacting you? Is it the supply chain which is there? What kind of inflation that you have seen from a raw material point of view, and how much of that you passed on to the customers?
Yeah, so I think when we talk about the disruption, it's not specific to the shoe industry or retail industry, but it's to consumer sentiment, right? So when it first started, I think there was a lot of eyeballs watching what was happening out in the Middle East. I think that has calmed down a little bit. We've been able to mitigate any spikes in input costs on our raw materials by hedging going forward. So we've been able to mitigate a lot of that. And that's why we don't see that having much of an impact going forward. But overall, though, I think we run a stable business and we continue to invest in our banners that grow. And, I believe that we can continue to perform as we've always guided to.
You've been expanding I think in last you mentioned about the expansion in last fiscal. What is the kind of target that you have for this fiscal, and is the expansion a little slower than expected, given the challenges like a BIS and all?
Yeah, I think if we didn't have BIS, our expansion would be much easier and much faster. But it's not slower because of BIS. You know what happens is we want to open profitable stores. That is the foundational principle that we open new stores with. It's not about the number of new stores we open or some narcissistic number we're trying to reach out there. What we want to open is profitable stores, and as and when those deals come up, we jump and grab them. If they don't come up, we don't push to make something that's probably a bad deal a good deal, because it never works in retail, right? So we feel confident that we'll continue our growth pattern. Last quarter was a little bit slower in our new store openings. A lot of it has to do with the shifts. Some malls that should have opened haven't opened. You're gonna see that go up and down. But overall, we feel comfortable that we'll continue to see our growth pace in new stores.
Talk to us about the other lever, and Sanhai's Harsh here. I want to ask you on Foot Locker, on Metro Active, on Clarks, some delays over there. Do you think that those get leveled off very quickly, and do they start playing catch up?
Yeah, so I think Foot Locker delays and Metroactive delays are going to be continuing till we get our vendors that supply us, they get a hold on what's happening with BIS, and they're making good progress towards that. Our Clark's business has absolutely hit the ground running. We're very pleased to see how well it's performing. And just because of BIS, we want to ensure that we have a solid supply chain before we start the EBO opening run, which should be in the second half of this fiscal year. And, we feel very good about what's happening with Clarks, not only in women's, but also in men's, which is terrific to see, and also in multiple categories, whether it's sandals or closed footwear, which we think is a great brand to have.
And, the store count, Nissan, does it accelerate in terms of the stock count growths substantially in Q2 and H2, or what's the kind of clip that one expects?
Yeah, so, we're very opportunistic, right? We make sure we get the right growth. It's not about the number of stores, but I honestly believe that we are committed to growth. We're committed to profitable growth, and I don't see that slowing down any. It might go up and down in a single quarter. It's not back-ended necessarily. It's as and when we get them. Sometimes we get them at the front end of the year. Sometimes we get them at the back end of the year. It's just when we get them, Harsh, that we work on it. We have a great BD team that's on the ground, working throughout the country to find the right deals.
Last off, Nissan, any new brand tie-ups in the pipeline that you can talk to us about?
You know what? I think we got an amazing stable of brands and retail banners that we have. I think each one of them has a huge opportunity for growth. We'll continue to evaluate brands as they come in, but from where we sit today, I think we got a great set of brands to grow and penetrate the footwear demand in this country.
All right. Thank you so much for coming in and giving us that perspective. That's on Metro Brands. The numbers looked good. Thank you, Nissan, for coming in and speaking to us.